House Economic Advisory Panel led by former Fed Chief Paul Volcker out with a long-awaited report on overhauling the tax code. Now, one of the proposals lowering the corporate tax rate, which tops out at 35%. The question we're asking today is, should it be reduced or not? Dan Mitchell, senior fellow at the Cato Institute, says a corporate tax rate cut is necessary to create jobs and wealth. Christian Weller, senior fellow at the Center for American Progress, says the U.S. economic and tax system is clearly working out for corporations. Christian, I guess I'll just start with you. It seems to be working out for corporations because they're making more money, but would an even bigger incentive here in the tax element be something that would spur a little job growth?
I think that's hard to see. At this point, clearly companies are investing already. The investment growth is the strongest since the late 1990s. The latest numbers actually were revised upward for business investment. Their profits are up handsomely, much faster, 50% faster than their tax bill. So clearly things are working in the right direction for corporations. What we can do, but that's separate from the growth discussion, is we can streamline the tax code. We can make it more efficient. But what the advisory board has suggested is lowering the tax rate in exchange for broadening the tax base, taking away some of the deductions, and thereby bringing the corporate tax code more in line with international comparisons. I think, but that's a separate discussion. I can't really see how that would ultimately affect overall economic growth from the side of the businesses, given how strong businesses are performing right now, both in terms of investment and profits.
All right, Dan.
Well, I'm getting dizzy. Christian was spinning so effectively there. First,
My
the
pleasure,
actual
Dan.
corporate tax rate is 39% when you include the average of state taxes. And when you look around the world, the only country that has a corporate tax rate around our range is Japan. The average in Europe, with all those welfare states that Christian loves, the average corporate tax rate is 25%. There's no question our tax rate on corporations is far too high. It's undermining competitiveness. And let's focus on a real-world fact. Companies don't pay taxes. Workers, consumers, and shareholders pay taxes. So when we have a very high corporate tax rate, of course it's hurting our economy and reducing job creation.
Dan, hold
well,
on.
You can't really
the
look
difference
at
between the rate, the statutory rate, and what companies pay, as we all know, is really, they're not the same thing. Most companies are not paying 40%. I mean, last year, a whole bunch of companies paid nothing.
Well, if you don't have any profits, you're not going to pay any tax. And our tax system has tons of loopholes in it that I don't like. I would love to get rid of the ethanol credit and things like that help big agribusinesses. That's why I'm a big fan of the flat tax. So in some sense, Christian and I might agree, let's get rid of deductions and let's lower the rate. Of course, we'd probably fight about where the rate should be and how do you define a deduction.
Well, no, I think that's exactly a point. I mean, I think on the tax side, I think you can make the tax code much more efficient by really lowering the rate and closing a lot of the loopholes and the various credits that are out there that ultimately just are a boondoggle to accountants and to gameplay.
Christian, do you end all up, though, your actual pay rate? Does it end up higher in your scenario? Because you cut the statutory rate, but you eliminate so many loopholes. Is your net rate going to be higher or lower than where it is today?
Well, I think at this point you really need to look at this. It's unclear where the political chips will fall. The fact is that our corporate tax revenue relative to GDP is the fourth lowest among the OECD. The fact is also the corporate tax revenue has fallen from a little over 20% of total tax revenue to down to 10%. So clearly corporations are making out like bandits, given the various loopholes despite a relatively high tax rate.
All right,
clearly there is
that's a lot
for
her argument. The revenues are low because the rate is high.
We're going to have you back. We're going to have you back because this is a good one.